What's going on, you guys? My name is Zach Hartley, and in this video I want to tell you about the next drone company that I plan to invest in. It is not EHang, but it is a direct competitor, and they have over $1 billion in confirmed orders. Here is everything you need to know about Archer. Okay, so the reason I am adding to my portfolio and adding a new company is because my current holdings in my current drone companies are starting to become a little out of weight. They just take up a little too much of my portfolio, so I want to trim them all a little bit. I want to add in a new company there, and I want to diversify a little bit. I currently own UAVs up over 130% right now, but it makes up 16% of my portfolio. I also own Dragonfly at 14% of my portfolio, up over 350%. And then I own Drone Delivery Canada stock as well as the warrants, both at around 10% of my portfolio, and both of them doing extremely well. But what I'm planning to do tomorrow is trim a little bit of the positions, free up some cash, and then I'm going to reinvest it into another drone company because I am still extremely bullish on the space, but I don't want too much of my portfolio in one single company. And so I'm going to diversify a little bit. And the company I'm going into is called Archer, and they are available through a SPAC, a special purpose acquisition company, and that company is called Crest Investment Corporation. And so when you buy the ACIC ticker symbol, it represents Atlas Crest Investment Corporation, which is basically going to be merging / acquiring with Archer. And so that's how you buy it into Archer. Is you're not actually buying the Archer company, you're buying the SPAC that is about to merge with it. It's available on the New York Stock Exchange at a price of $16.10, and Archer, the company, is headquartered in Palo Alto. Now, this is what the kind of ticker symbol looks like on Yahoo Finance here. And what I found really exciting about this company is that somebody else is also interested in it, and that is Cathie Wood. So this is the ARK Investment, basically trade notifications, and we can see here that ARK Investing bought ACIC 372,000 shares. Cathie Woods just went out and bought 372,000 shares of this company just a few days ago. So very exciting. 0216, and I'm making this on 0217. So just yesterday, Cathie Woods invested a ton of her money into this company, which is definitely a sign of confidence, and I like everything that lady does. So this is definitely a good sign. Now, when we dive into the company, you can find all of its information at archer.com/investors, or you can also go to the SEC to see all of the filings and all of the merger documents. Now, the business model behind these guys is kind of unique. It's a little bit different than, say, Drone Delivery Canada. These guys plan to be an aircraft OEM business. So what that means is original equipment manufacturer. That's what OEM means. And by that, they're saying that they're going to manufacture and sell the drones. That's different than Drone Delivery Canada or some of the other companies that we've looked at. These guys actually plan to manufacture and sell the drones, and then they also plan to develop a ride-sharing business. So two different kind of revenue streams, both of them completely different than Drone Delivery Canada, for instance. So there's a lot of diversification within this industry, but definitely some pretty exciting business models there. Now, when we dive into them and we say, okay, how are you going to do that? Well, it's kind of exciting because when it comes down to revenue and production, this company already has both of those factors figured out. These were the two problems with EHang, is that we weren't sure where they're producing these items and if their revenue is real. And what's so cool about this company is that we already know about it. We already know how they're going to produce these items and who they're selling them to, because United placed a $1 billion order for their product with an option for $500 million in additional aircraft. So absolutely amazing. They already have a $1 billion order. Absolutely amazing. We're going to dive into this in a second to just see how valuable it is. But on the other side of it is, how are they going to make these drones? How are they going to produce them? Where are they going to produce them? Well, they already have an OEM partner with a multi-year collaboration agreement that is going to produce all of these drones for them. So what's really nice is that this company already has $1 billion in orders that are stacked up and ready to go, and they already have a production partner that is ready to go to start manufacturing for them. And so what's so cool about this is, these are the two problems that EHang has, and this company already has them completely figured out. So I'm really happy with this. I think it's absolutely phenomenal. And in their investor presentation, they gave us a little slide deck here that shows the differences in the transportation alternatives of going from Manhattan, so downtown New York, to the JFK airport. And so you can see that by car it takes 60 minutes, UberX it takes 70 minutes, and then by helicopter it takes 22 minutes. And it's the exact same time frame with Archer. However, the cost drops from $1,700 all the way down to $50, which is absolutely amazing, and they're zero emissions. So what these guys are really competing with is not any other drone company or not any other cars on the road. They're competing with helicopter services and basically trying to lower the fee, or at least that's going to be their entry into the market. That's the easy low-hanging fruit. Is anywhere that a helicopter flies right now on a 30 to 1 hour long flight, these guys can probably do it for way cheaper. And so that's going to be the low-hanging fruit where I expect them to go first. And what's kind of cool is when we dive into the United partnership, this is a quote from the CEO yesterday. He put out an interview. This was the transcript of it. And this is really, really exciting because he says, United ordered aircraft, but it wasn't just an order, it was a partnership. This partnership was really designed around how do we help bring this future to a reality as quickly as possible. So we are aligned in that they are helping us get to market. They're helping us with things like certification, and they're helping us with things like maintenance and operations. So what's really cool here is that they didn't just sell United a bunch of aircraft and then have to deliver them. United knows that this is a young company that's going to need some help with certification and maintenance and getting off the ground and giving a little bit of infrastructure that United obviously has and probably isn't using right now because of the downturn. So it's absolutely a perfect partnership with United, and it's great for Archer because it allows them to get up and running. And what I really think is going to happen here is that these drone taxis are going to replace all the low-hanging fruit, which is basically helicopter transportation right now, and then the applications are going to increase and grow from there. But I really, really like Archer right now. Okay, now I'm going to have some fun with this slide because it's kind of funny. And so Archer, this comes from their investor deck. So obviously this is biased and one-sided, and they make themselves look good here. But you have to kind of laugh at the differences here because they compare themselves right here directly to EHang on the right side here, and you can see some of the differences. So for certification, Archer's available in the US. They're saying that EHang is only available in China. They can also transport 4 passengers compared to 2. And if you look here, this is really interesting because this was highlighted in the report, the short selling report. Every single company on this list is focused on piloted transportation. The only company in here focused on autonomous transportation is EHang. It's kind of something that you might want to think about here, and the report definitely touches on this point. So very, very interesting. End market, urban air mobility, pretty much the same thing, kind of all the way across, depending on how you look at it. Mass manufacturing, design, and capability, not too much going on there. And then key partnerships. These guys have a partnership with United for $1 billion in orders, and they have an OEM manufacturer ready to go. Everybody else, it looks like they're kind of building partnerships. I don't know what the deal is with EHang. I think they have a couple partnerships, but I don't know too much about it. Contracted orders booked. Yes, Archer has some orders booked. EHang says that they have orders booked, but I don't know if those are real or not. And then it gives you a little bit more detail about the battery energy and the speed and the distance. And they're saying that EHang has low speed and distance, whereas they have high speed and distance. Obviously, we don't know what high or low speed and distance means because this is pretty obviously it's a little one-sided and it's pretty generalized right now, but they're saying that they're going to be able to go further and faster than most of their competitors, which is definitely something you'd like to hear as an investor. Now, when we start to look at the charts, this is where it gets really interesting. It's a SPAC, so usually they come out around $10. That's exactly what happened here. Came out at $10, had a little bit of resistance around 12, again around 12 here at the beginning of February, and then the news came out that United had placed the order, a big massive order for like $1 billion, and as you can see, the stock gapped up massively. It had a big jump up, and then just today it closed at 16.1 and set a record high of 1650. So it was a fantastic day. The stock was up 13.86%. Even though we got some red candles here, the stock is still doing extremely well, up over like 35% since last week. So it's doing extremely well. Now, here are my thoughts. Here are my final thoughts. I own a bunch of drone companies. I like the drone industry. I really like what everybody is doing, and I'm a huge supporter of it. I'm going to trim a couple of my positions, free up some cash. I think I'm going to take a position in Archer either tomorrow or the next day. We'll see how the chart kind of plays out. I'm going to time that appropriately, but I like this company way better than EHang. I think everything about them is solid. I don't see any major red flags. They already have $1 billion in orders booked, which is absolutely amazing. Obviously, you can make the same argument. EHang's only collected 20% of their revenue. These guys have collected 0% of their revenue, so you kind of have to measure that with a grain of salt. But I like that at least they have a bunch of orders from a reputable United Airlines that wants to partner with them. I think that's absolutely massive. So I like the company. Kathy Woods likes the company, ARK Investment likes the company, and you might want to consider it for a small position in your portfolio. And if you're interested in learning how to look at companies like this, understand the financials, look at the charts, then definitely consider signing up for my stock market course. That is where I have over 9 hours of content, and it's completely free when you sign up for a 2-week free trial on Skillshare. There's a link for it down in the description, and there's over 2,500 students that have already gone through the course. There's over 140 plus reviews for you to take a read through and see what other people thought of it, and I promise you it will be the best free resource that you can find online. Now, just as a disclaimer, you need to do your own due diligence. This video was not sponsored. It is just my opinion, and if you get any value out of it, please consider hitting that like and subscribe button. I sincerely appreciate it, and I will see you guys in the next video. Good luck trading, good luck investing. Talk to you soon.